China bans major institutional investors from selling stocks at the open or close and plans to track who is shorting. You heard that right. Things in China's stock market and economy are getting so bad, they are actually banning some of these big players from selling. Here are more of the details. China tightens grip on stocks with net sale ban at open and close. China has banned major institutional investors from reducing equity holdings at the open and close of each trading day, part of the government's most forceful attempt yet to prop up the nation's $8.6 trillion stock market. Do you know how bad things have to be for them to be like, you're not allowed to sell at open and close? Like, that's the most wild thing. The order from China's securities watchdog was recently delivered to major asset managers and the prop trading desks and brokerages. The China Securities Regulatory Commission, the CSRC, was also created a task force with the nation's stock exchanges to monitor short selling and issue warnings to firms that profit from the wagers. So they've already been going after shorts, people who have a negative opinion on the market and are betting against it. Now, just even people who are bullish and want to unload, we're not even going to allow you to do that. While authorities have been ratcheting up curbs on bearish bets for months, the ban on net selling at the open and close represents a notable tightening of the government's grip on market activity that risks upending popular strategies used by hedge funds and other institutional investors. Firms affected by the ban are unable to sell more shares than they buy during the first and last 30 minutes of trading. It's unclear how widely the ban is being applied across the financial industry, and there's no indication it will affect individual investors who account for a large portion of the volume on the Chinese market. Still, the sidelining of major institutions during two of the most closely watched parts of the trading day may make it easier for government-backed funds to influence the market, especially the closing levels of benchmark indices. Manipulation. The Chinese government is basically saying, hey, for the time being, we are more than willing to highly manipulate our own market to basically fight off, I guess, some sort of crash, collapse, something like that. I mean, it can't be good. In addition to the trading curb, some brokerages have asked to recall stock loans to clients for shorting purposes. People familiar with the matter said some quantitative hedge funds are still banned from cutting equity positions in their leverage market neutral funds, a strategy known as direct market access that was halted in early February. When you're calling back stock loans, it's basically stopping from shorting. China has forced part of its clampdown this week on quantitative trading after a major hedge fund sold a combined 357 million in shares within a minute Monday after the market opened at 9:30 a.m. The move deemed as quote unquote disrupting normal trading order. That's my favorite part of this entire article, because as if none of this other stuff is disrupting normal trading order. Some participant in the market freely buying and selling is considered disrupting, but then if the government stops everyone from doing what they want to do, that's not disrupting. This prompted the two major exchanges to freeze its accounts for 3 days in an unusually harsh punishment. The Kohrs has pledged to tighten supervision of quantitative trading. Quant trading can help with market liquidity and price discoveries. Such trades have obvious technology, information, and speed advantages over smaller investors and can amplify market volatility at certain points. They're just giving us the classic PR runaround. Like, these quants, man, we're helping the little guy because quants are faster, and that's the problem here. No, the problem here is your stock market's on tilt, and you're doing everything in your power to stop it from going kaput. It's one of the most vicious games out there. So I get that they're trying to stop something here, but I mean, the rest of the world's paying attention. You're paying attention. I'm paying attention. I bet there's some smarty pants out there with a bunch of money who's going to figure out a certain way to play this that the Chinese government cannot stop. And I think this is going to get interesting. I think this is going to get very, very interesting. So stay tuned for the next update on China and them totally 100% not manipulating their own stock market.